And JP Morgan cut its price target to $125 from $150. Also, Truist Securities cutting its price target to $299 from $348. Even the $299 is well above where the stock trades right now at $118. Let's get over to Phil LeBeau. He has the details on this. Phil, good morning.
Good morning, Becky. And the commentary from analysts is mixed this morning, largely because they say, look at these numbers. Even if you are a bull, you cannot be optimistic about the numbers that Tesla reported for the fourth quarter and for all of 2022. For the fourth quarter, the deliveries came in below consensus, which was for 417,000 vehicles to be delivered. They were delivering 405,000. Total for the year, 1.31 million. That's also below what the expectation was. Here's why that's significant. That 1.31 million, that's growth of just 40% compared to deliveries in 2021. Remember, the company's general guidance, which they gave, I want to say about a year and a half ago, was that they would have average 50% annual delivery sales growth. Well, this is clearly not 50%. Now, Tesla bulls will say, well, look, they said they would average that over many years, so you're going to have some years where it's not 50%. But 40%, that's well below expectations. The problem goes back to China. We talked about this in December, and really at the end of November, you started to see the sales pace slow in China for a couple of reasons, COVID restrictions being a primary one there. But you also have greater competition, and it's forced the company to cut its prices, whether it's in China or at the end of December here in the United States. That's going to be weighing on margins. So as you take a look at shares of Tesla, remember that the fourth quarter results will be reported just about 3 weeks from now, January 25th. Two things are going to be in focus between now and then. First of all, does Elon Musk say anything about the annual delivery guidance? Do they bring it down? Do they say, look, in the future, it'll just be 35 to 40% annual delivery growth? Or do they also talk about the impact of margins and the compression that they're going to be facing? I don't expect any commentary pre-earnings about margins, but they may say something about delivery guidance, though it's more likely we'll probably get that when Elon Musk does the earnings call on January 25th. If he does the earnings call. I suspect he probably will. So we'll be covering this all day long, guys. Not surprising to see the stock under pressure, given the fact that these numbers came in short of expectations.
You know, the margin question is really interesting, especially with the discounts they were offering to have people deliver, accept delivery by the end of December. And then I think there are additional ones in China to receive by maybe the end of February.
Right. And so the question becomes, do they start doing more of this in the future, Becky? And you know what that looks like if Tesla starts doing this on a regular basis? Traditional automakers. And for a long time, that was the thesis for Tesla bulls. They are not a traditional automaker. They won't have to get into the incentive game like everybody else in the industry has for decades. Well, now your question becomes, you did that at the end of this year, and yeah, occasionally you see that in the past from that, but very, very rarely. Now has this become a regular part of Tesla's business? And if that's the case, why are you giving them the multiple up here when traditional automakers have a multiple down here? Yes, they have higher gross automotive margins. That's not going to erode immediately, but that's going to weigh on those margins, and that's part of the question that analysts are trying to figure out right now. What kind of multiple do you give this company if you see demand slow down and you see margins come under pressure?
And if they can't get the government subsidies they used to get as well.
Sure.
Phil, thank you. We'll be watching through the day.
It is a new low today, a new 52-week low. Speaking of stocks that have been in a downtrend, hitting new 52-week lows seemingly every day, if not every other. There it is, down near 14% today, getting back towards $100 a share. So I want to discuss this in this way. Joe has it in the Joe T, as most of you, I think, at this point know, because we discussed it on multiple occasions last week. And therefore, you're limited to what you can really say right now until you go for the rebalance at the end of this month, when you'll be more public with the kinds of moves that you made. So taking all that into context, I'm curious, Josh, of your thought on what's been going on here, if you view it much of the same way you do Apple. I haven't gotten your perspective or point of view on Tesla since this whole thing really accelerated within the last, say, 2 weeks.
So full disclosure, I never made any money in Tesla on the way up. I never owned it. So I was wrong on the stock for 10 years. But the thing that kept me away was my inability to make the leap from it's a car company to it's a technology company. And had I been able to make that leap, I would have made a lot of money in this stock, and a lot of people did. And I just was not one of those people. But that's what kept me out. His personal antics or what, I think he's hilarious. So that's not the reason why I don't like Tesla or whatever. I just couldn't make the leap, because then I look at Ford, I look at GM, you back out the cash. These stocks were trading at like 5 times earnings. So, and then look at the Japanese automakers. So I just was never there. Now it looks like the puck is headed toward where I've already been, which is that, oh my God, it turns out they are susceptible to cyclical demand trends within the auto industry. It just took a while for them to get big enough where that would actually matter. That's number one. Number two, I know the bears have been wrong talking about competition on Tesla all these years. I understand that. But now they're right, because when you look at the EV offerings from every major auto manufacturer and some of the upstarts, there's a lot of product coming to market, and it just makes it harder for Tesla to stand out. Even if you believe, which I do, that they have a lead technologically. The third thing is what's going on with his brand. That argument doesn't really move me, that all of a sudden every liberal who wanted an electric car is going to hate him because he RT's DJT. That doesn't move me, but I do think that sentiment weighs on the stock right now. I don't know for how much longer.
Well, I mean, the stock is down significantly since the Twitter deal.
Let me ask you a question. What does Tesla stock do the day he announces a new CEO? What do you think it does? I think it goes up like 15%.
It probably goes up. The question,
you want to be short of that day?
Well, the question is, does it stay there? Because last week it had a nice
Nothing
rebound,
stays anywhere.
Steph, I had one money manager tell me last night that Tesla, quote, remains the biggest opportunity to extract further reduction in excess market cap in public markets, i.e., this stock needs to come down even further. The bubble needs to pop even more than it already has. It's heavily owned. It has a retail component to it. What do you make of that comment?
Well, it's possible, but the stock's already down 80% from its highs, so a lot of bad news is priced in. It's interesting that it now trades at 28 times earnings. That's getting more reasonable. I'm not touching it at 28 times earnings, but this thing used to trade at 100 times earnings. So 28 times is certainly interesting.
It's 21 times. I mean, why is 21? Why is 21 more reasonable? You use your word, more reasonable now. If you say why should they even get that sort of premium now?
Well, I'm saying I wouldn't touch it. I don't know what numbers you're using, but I have 28 times estimates on forward. If it's 21 times, fine. They just put up 40% growth in deliveries for 2022. This company is not shrinking massively. My problem is you are seeing more competition, to Josh's point. You are seeing price cuts. You do have a book to bill that is under 1. It's at 0.65 times. So they're definitely feeling the pressures. And so at 21 times, it's not that compelling. But I'm going to tell you that down 80% from its highs, there's certainly more value here, given the growth that they're putting up. So I'm watching it. I've never owned it. I've missed it all the way up, missed it on the way down, but it's certainly something to contemplate as it continues to just spiral downward.
So, Joe, 40% growth is obviously great.
As Musk's ecosystem grows, his actions could have greater ripple effects. Let's bring in Steve Wesley for more. He's former Tesla board member, founder and managing partner of the Wesley Group. Steve, it's good to have you. Let me just quickly start with what Laura just reported. It is pretty astonishing that SpaceX hasn't suffered the same fate as Tesla itself, as Twitter. What does it tell you about the Elon Musk effect?
Well, look, a lot of people are saying they barely missed numbers for this quarter. The fact remains they sold 405,000 units. That's an enormous number, heading to 1.31 million. That is 40% growth. No other auto company in the world is growing that quickly. Additionally, they're the most profitable auto company out there with 16% gross margins. That compares to about 5 or 6% for Volkswagen, General Motors, or Ford. They're doing pretty darn well. But make no mistake, share price off 65% for the year. That's not good. But I think a lot of that is due to two things. One, all of the havoc with Twitter, and also the fact that Elon himself sold $23 billion of shares this year alone. That put downward pressure on. But if you look forward to next year, put some of the intrigue behind us, I think Tesla's looking at an awfully strong 2023.
So let me ask you, Steve, I don't know whether you continue to speak with Elon Musk privately, but if you were to talk to him privately right now about Tesla and what he needs to do to right the stock, what would you tell him?
Well, first, I don't speak with Elon, so I have no inside information here. But here's what I'd say, and I've known Elon for 25 years. You're a brilliant innovator. You have literally helped create the electric vehicle industry. Virtually every company in the world is going all electric. Stay focused. You're the king of the hill now. Don't let anybody take that away from you. Here are the three things investors need to look at. One, Tesla needs to continue to grow internationally. Already, they're doing a great job of that. They've surpassed the Volkswagen Golf as the #1 selling vehicle in Europe, gas or electric. International growth has been stunning. Keep the profitability lead. Tesla's doing two things none of the other automakers have been able to do. One is drive the cost down, cost of batteries faster than anybody else. They were the first to take battery production in-house. It's given them a real cost advantage. Second, nobody is driving more revenues from what's called over-the-air software. That's 95% gross margins. That's great news. They also need to win the trucking wars. They're bringing the Tesla Semi to market now. Tesla Cybertruck comes out in July, sometime in early Q3. If they do well there at all, that's going to be a spectacular year for 2023. Real advice is stay focused, continue to bring in top management. The move that was announced this week, bringing Tom Zhu in, the best operating executives from the country, the person who really made Tesla China hum into the U.S. He may be the heir apparent to be the new CEO at Tesla.
Yeah.
Will